Will mortgage delinquencies be the straw that breaks the camel's back? That's what a lot of people are expecting right now in the housing market. They're expecting when forbearance ends that there's going to be this huge wave of foreclosures, homeowners that aren't able to continue making their mortgage payments, which in turn is going to start this foreclosure wave, which is going to lead to more property coming to the market, buyer demand to slow, and ultimately a housing crash. Well, today we received some data from Black Knight that talks about the latest delinquencies with regards to mortgages. We're going to talk about that in a little bit more detail, as well as show a report from Black Knight that, keeps us up to date on what's happening with those in forbearance. When they end forbearance, are they performing on their loans? How many of these people are actually delinquent on their mortgages? And how many were actually delinquent prior to the pandemic even starting, because those numbers are added in there. Now, if you're following the news or the media or what have you, you see these reports that 10 million people are delinquent on their mortgage or whatever it is. But what they're doing is they're counting the number of people in a household, right? So as you'll see from the report that I'll show, there's currently 2.1 million people that are quote unquote seriously delinquent on their mortgage, but those people are allowed to be delinquent on their mortgage because they're in forbearance. Now, when they say seriously delinquent on their mortgage, they're talking 90 days or more. But if you're allowed to be delinquent on your mortgage, are you really delinquent? Well, we're going to take a look at these numbers, give you some guidance. We're also going to talk about homeowner equity. That's something I've talked about when discussing this topic, when people bring up, what happens at the end of forbearance when these people have to, come up with the payments, or, they have to come up with a plan, if you will, if they're not able to continue their payment. Well, my response is, the majority of these people have equity in their property. In fact, in 2020, homeowners gained more equity in their property than ever in the history of home equity. What I meant is that they have more equity in their property now than ever before. And so that would allow people to sell their property if they came to the end of forbearance and weren't able to make their mortgage. But the argument that a lot of people are saying, well, these people have been able to miss their payments. And so while they had this equity, what happens when those payments get added to the back of the loan? Do they still have that equity? Again, one of my arguments to this point is that if you have homes appreciating at, say, last year, somewhere between, say, 5 and 7% in a lot of markets. In fact, a lot of markets were even higher than that. But if you take 5 to 7% on average, and let's use somebody that has a $500,000 mortgage. $500,000 mortgage, give or take, is somewhere around $2,000 a month, maybe a little bit less depending on what your rate is. And so that is $24,000 a year in mortgage payments. So if you had a $500,000 mortgage, chances are your property is actually worth more than $500,000. In this case, let's just say $600,000 for our conversation here. If homes appreciated on the low side 5% last year, or even this year going forward, that's $30,000 in equity that they gained over that year. And so if your mortgage payment was $2,000 a month, that's $24,000. If you gained $30,000 in equity, you still gained $6,000 in equity, even though you were able to miss those payments. Now, I understand that all markets aren't going to perform like that. There are going to be issues. I'm not denying or trying to avoid that. But what I'm trying to point out to people is that when you see the news report, 10 million people are delinquent, or there's 2.1 million people that are seriously delinquent on their mortgage, that doesn't mean that all of these people are going to default on their loans. That doesn't mean all of these people are going to foreclose on their loans. There will be some of that, of course, but what we're seeing actually from the reports that I'll show in just a moment is that the large majority of people exiting forbearance are actually performing on their loans. And the reason I bring this up, for one, is because there's a lot of people sitting on the sidelines hoping, wishing that foreclosures are going to come to the market, for one, to help out with the supply issue, but also because they think that they're going to be able to get a deal on these properties. And so they're sitting, hoping, waiting for, that opportunity, if you will. And chances are that opportunity, quote unquote opportunity, is less likely to happen anytime in 2021, probably not even in 2022, if it happens at all. So let's take a minute and pull up these reports that I mentioned a moment ago to give you an idea, and then we can talk a little bit more about it here in detail. So the first report I'm going to pull up is a report from CoreLogic that you see here. Now this is from this is Q3 of 2020. They don't have the latest one out. And again, Q3, at that time, the average homeowner had $194,000 in equity in their property at that time. That's average equity per borrower based on CoreLogic's report. So the majority of people have a lot of equity in their property. So if you're able to go a year and a half without making your mortgage payments, chances are you still have some equity in your property. Now let's take a moment and pull up the report from Black Knight. Now this report is actually from December, because the report that was just released today actually isn't put in report form until March. So we're going to go off the December numbers, but the idea here is that to show you what the numbers look like then, because they're kind of following a trend, if you will. The fact that delinquencies have gone down from these numbers show that the numbers have likely improved a little bit. But let's see what is happening to homeowners as they exit forbearance. We're going to take a look at those that were delinquent prior to the pandemic, as well as those that became delinquent after the pandemic. Is there a difference in the two? We're going to take a look at that report now. So let's take a minute here and pull that up. All right, so as we see here, on the left-hand side, you've got those that were past due as of February of last year. So these people were already delinquent on their mortgage. And on the right-hand side, you have those that became past due after the pandemic hit. So on the left-hand side, you've got 1.8 million people that were already delinquent heading into the pandemic. And since then, you had 4.9 million that entered forbearance during that time. And so, here on the left-hand side, those that were delinquent headed into the pandemic, you can see, that 26% of those people have exited forbearance. And when they exited forbearance, they were performing on their loans. So you can see that 26%, a quarter there, just more than a quarter, have been performing on their loans. Another 6% have paid off their mortgage. So 32% of people that were past due headed into the pandemic have exited forbearance and or are performing on their loans. The key number here, instead of going through all of these, is that 6%, only 6% of those numbers are actually delinquent on their mortgage. They came out of forbearance, they couldn't continue making their payments, and they've become delinquent. And so that's only 104,000 people. This isn't a massive foreclosure wave that a lot of people are talking about if only 104 people are delinquent. Now, there will be more. I'm not denying that or trying to avoid that. I do believe there would be more, but I'm just showing you what is happening as of now. Now, let's take a look at the numbers on the right-hand side. Now, again, 47 people have exited forbearance and are performing on their loans there, with another 12% having paid off their mortgage. So you got nearly 60%, 59% of people who have exited forbearance and are performing. Only 2%, 64,000 people are delinquent on their mortgage. So if you take the 104 from the people that were delinquent prior to the pandemic plus the 64 that are delinquent since the pandemic, you only have 168,000 people that are really delinquent on their mortgage. And how many of those people actually have equity in their property and can sell it? Good question. I don't know the answer to that, but there are some highlights here that I want to talk about. So of the 4.9 borrowers current on their mortgage headed into the pandemic that entered forbearance plans, 65% have left those plans, with 59% either now performing on their loan or having paid their mortgages in full, which I mentioned a moment ago. And 6% of borrowers who already delinquent heading into the pandemic have since entered and left forbearance and remain delinquent and are at risk of foreclosure if and when moratoriums expire. So that brings up another question. what is actually happening with the moratoriums. If you've been paying attention at all, I will post a video here. But recently you had FHFA, which is the Federal Housing Finance Agency. They oversee Fannie Mae and Freddie Mac. They extended the foreclosure moratorium through the end of March. And then you have FHA and USDA extending the foreclosure moratorium through the end of June. And at the same time, you have FHFA as well as FHA extending the ability for people to enter forbearance. And so, and even extend forbearance past that original 12 months. So the likelihood that you're going to see any changes in the housing market with a foreclosure wave, or really any real change in supply in 2021, isn't likely, just based on these numbers. I mean, the only thing that is really, or that really could change the housing market, is either an increase in supply or interest rates to go way up. Now, you might say, well, interest rates have been rising for the last couple of weeks. That's definitely going to affect buyer demand, and that's going to add to supply, and the market's going to slow down. Yes, rates have gone up the last couple of weeks, but we're talking somewhere around 0.25% in total. So, you're not really seeing enough of an increase to slow the housing market. And we know that supply isn't likely to change anytime soon. So, yes, there will be foreclosures coming when these moratoriums end, but I don't expect those foreclosures to be enough to really change the supply dynamic. The one thing that could change the supply dynamic at some point is if you have supply increasing and you have interest rates increasing at the same time. That would stall the market a little bit, but chances of that happening anytime soon aren't likely at all. So if you're one of those people sitting on the sidelines thinking that, that this is going to happen in the short term, I think you're going to be disappointed when you find out that, this year you're likely going to see a year very similar to 2020 with regards to appreciation. And even 2022 could look a lot like this year if supply and demand doesn't change, which neither are really expected to, based on, economists and what a lot of the market experts are saying. So, I'm going to continue to update you. I will bring out that full report from Black Knight when it's published in March to give you a better idea of what loans are doing at that time. But if you have questions, comments for me, do me a favor, leave them below. But for now, I appreciate you taking the time to watch. Appreciate the support. See you again soon. Have a great day. Bye-bye.